Yo guys, what is going on? It is your host BK with Let's Become Billionaires, and today we're going to be talking about the ridiculousness with Tesla's stock price. Now, I believe it is amazingly undervalued and a lot of people are going to disagree. So why is the stock TSLA down today, and why did I buy a couple grand worth even though everybody's saying it's in a bubble or that it's overvalued? I hope you guys are ready because it's going to be a very exciting video. Alright, what's going on guys? This is BK with Let's Become Billionaires, and if you're new to the channel, welcome. Feel free to subscribe as we'll be talking about Tesla a lot more often, and I like to talk about innovation and disruptive technologies coming into the stock market. Now that being said, as I already said in the intro, we're going to be talking about Tesla stock and its valuation. Now in this video, we're going to stick to only its car business because a lot of people keep saying that Tesla is just a car company. Now, even if it was just a car company, this company's still amazingly undervalued. And for that reason, I want to look at just a car business and explain why today's pricing makes no sense, in the sense that today's prices for the stock are still too low. Let's jump into it by looking at some of the assumptions I'm going to make for Tesla in a decade, what the profits are, the profit margins. I'm going to explain all of that to you, and then I'm going to explain why these profits make sense, and if you assign a multiple to those profits, what is the stock price going to be? So with that being said, let's jump right in. So the first assumption, guys, is we're going to assume 15% market share of the roughly 90 million cars sold each year in the auto market. We're going to also assume an average selling price of $30,000 per vehicle, and we're going to assume that 10% of consumers buy the full self-driving option. From there, we're also going to assume that each consumer buys about $4,000 of updates on their car throughout the lifespan of their vehicle. Now let's go through these assumptions one by one to show you guys why I believe each assumption is reasonable. Let's start with the 15% market share. Now the reason I believe this is reasonable is because Tesla is the only car company with over-the-air software updates, meaning they can improve the vehicle by simply changing the code. Now this could be changing the acceleration, the top speed, the battery efficiency, and therefore the car has a lot more value proposition, and consumers are going to say, hey, I can buy this car because I know in the future I can actually upgrade it to make it better and last longer and more efficient. On top of that, Tesla has about 30 billion miles of driving data, which means that Tesla is going to be the first player with autonomous driving. And this is going to give huge value to the consumer, making it almost stupid to buy any other car. Third, the cost of Teslas are so low because they're so ahead of the competition that Teslas are going to be the obvious option. It's almost impossible to go with a competitor unless you want to pay a premium for having a different car that's going to be able to do less. Finally, Teslas are the best cars. They're the fastest, best acceleration, best of batteries in terms of how many miles you can get with each battery pack and each charge. They have the most infrastructure laid out, and they have very good customer service and beautiful looking stores direct to consumer as well. So Tesla's just so good. It's doing so well with great vertical integration. It's almost impossible to compete with Tesla. So this makes the 15% market share actually very conservative. If I was going to be honest, I assume at least a 25 to 30% market share. So 15%, keep in mind, is very conservative. The second assumption of a 30 grand selling price, this is because Tesla cars are so good that I believe people are willing to pay up a little bit to be able to get a car that goes faster and accelerates faster just because they can, right? So instead of supercars being at the $100,000, $200,000 mark, now supercars can be brought to the $40,000, $30,000 mark. So $30,000 is conservative because of that. But in addition, the average selling price of a car in the US is 35 grand. And in China, it's pretty high for Tesla as well. And so 30 grand is actually a conservative estimate. In terms of 10% buying full self-driving, I believe almost everybody will buy full self-driving in the future. So this is a very conservative estimate, and I don't really think I need to explain why 10% buying full self-driving is a very conservative estimate. So we're going to move on from that right away. The last thing is 4K and updates. Now, if you look at Tesla, guys, they do over-the-air updates, and sometimes you have to pay for those updates. So for example, if you want faster acceleration, if you want full self-driving, if you want better electric efficiency, now these things come with a cost. And so I would not be surprised if over the term of the car, let's say somebody owns a car for 7 years, they spend another 4 grand just trying to maintain or better their car, right? So a lot of people, they might have their car for 5 years and they change their car. Well, now instead of people changing their car and buying a brand new car, they might just simply get a software update, pay that 2 grand, and voila, they're good to go. Now that was the last assumption, so let's get into the numbers, guys. So again, I said 90 million cars are sold every year. I'm assuming a 15% market share, and we're also going to be assuming that the average selling price is 30 grand. From there, we're going to assume a gross margin of 30%, since they're pretty close to this gross margin currently with Tesla cars, and Elon Musk projects 40%. So I'm going to be conservative, and I'm going to say 30% is a much more valid number, especially for the shorter term in 2030. By the way, all these numbers, guys, is for 2030. I'm assuming a decade out. Now, 2030, okay, I think it makes sense to say they have a 30% gross margin. So we're going to keep it there instead of 40 like Elon says. And finally, guys, we're going to assume Toyota's conversion of gross profits into normal profits. For Toyota, guys, if you look at each dollar in gross margin that they get, they turn about 47% of it into profit. Now, even though Tesla and Toyota have different business models in the sense that dealerships exist with Toyota's business model and in Tesla's it does not, and the fact that Tesla's much more efficient and Toyota is not, because of that, Tesla's actually going to perform better on this. However, just to be conservative, again, I'm going to only assume that Tesla has a 47% conversion of the gross margin dollar to profit. Now, if you multiply all of these values, guys, we come out with $57 billion in profits. Okay, I want to reemphasize that. $57 billion in profit. Now, this alone, guys, if we multiply this value by 20, okay, which is going to be the price to earnings ratio by 2030, this becomes a $1.14 trillion company, okay? And I'll put the numbers up if we multiply by 25p or 30p. Point is, it's well over $1 trillion at this point, okay? But before I stop there, let's add on the other things that Tesla can make money for through the vehicle. Now, the second thing it can make money through is, again, going to be, guys, the 10% from full self-driving, the 10% of consumers who get full self-driving. Now, if we look at this again, 90 million cars sold in the whole world, 15% market share for Tesla. 10 grand for each person who buys that, and we're going to assume that this has a profit margin of 10%, which is very, very low given that full self-driving is very scalable, and since it's software, it probably has a gross margin of like 20%. But again, we're going to be very conservative and just say 10%, okay? Well, this business is going to generate a $1.35 billion profit. Now, in terms of the 4 grand people are going to spend in terms of the lifetime of their car on average on software updates, etc., and improving the car in terms of entertainment, infotainment, whatnot. 90 million times the 15% market share times 4 grand, and then I'm going to multiply by a 15% profit margin since this is going to be purely profit. Again, all of these numbers, guys, are very conservative. A 15% profit margin is very low given software updates are usually very low cost and they're well scaled. But this is going to generate an $8.1 billion profit. On top of that, guys, they're going to have a Tesla app store. So while the car is driving, right, you can have some infotainment once autonomous comes around. So you don't need the steering wheel, you don't need seatbelts, etc. You can just focus on the screen and watch TV. Speaking of that really quick, I'm going to go on a quick tangent. I just mentioned you can get rid of the seatbelt and the steering wheel, etc. That is going to be factored into the vehicle's gross margin as well. So remember in the beginning how I said there's a 30% gross margin for the vehicles, and that's a conservative estimate. I think Elon Musk's 40% gross margin comes from the fact that he knows he can remove pedals, steering wheels, seatbelts, etc. once the cars become incredibly safe. So keep that in mind. But coming back to infotainment, guys, let's assume that they simply get $5 billion in revenue from the App Store, which is incredibly low, guys. Okay, that is incredibly low given how much time we spend in our cars. And once autonomous comes around, people are going to be driving more often and being in their car more. So the App Store is going to be very important. Well, let's assume a 20% profit margin here. Again, that is very low because Apple's is in the 30s, I believe. So we're going to be conservative, say a 20% margin on $5 billion. They're going to make $1 billion in profit from that. Now, let's add up all of those profits. So we have the $1 billion in profit from infotainment. We have $8.1 billion from the software updates. We have $1.35 billion from the FSD, which is, again, very conservative. And then we have $57 billion from the fact that they sell cars. Now, we're going to take that number and we're going to give it 3 different multiples, a 20, a 25, and a 30 price to earnings multiple. This means, essentially, guys, this is what the company's going to be worth just from the car business, assuming you assign these multiples to it, which I think these multiples are very valid because Tesla's a very innovative company growing fast, and I don't see its growth stopping in a decade. Now, that being said, if with a 20 multiple, guys, it's a $1.35 trillion company. With a 25 multiple, it's a $1.69 trillion company. And with a 30 multiple, it's a $2.03 trillion company. Now, today, as of making this video at least, it's a $670 billion market cap. Now, if we assign a 20 multiple from today's price to the 20 multiple price in a decade, the return is going to be 101%. With a 25 multiple, it's going to be 152%. And with a 30 multiple, it's going to be over 203%. Guys, this is insane. This is simply off of the car business, okay? Now, let's factor in solar. Let's factor in solar power. Let's factor in auto bidder. Let's factor in V2G. Okay, let's factor in robo taxi networks. Let's factor in the insurance business. Guys, there's so much we didn't factor in. VTOLs, right? Semi trucks, roadsters, all of that. We did not factor any of that in. And yet we came up with a great return on our investment. We didn't even talk about HVAC systems either, guys. They're getting into HVAC systems. The fact that this stock is always torn down and always said to be a dumb stock or an overvalued stock or in a bubble, I think is crazy. And that is why I bought a lot more today. And here's the thing. There has to be a slight premium given a Tesla stock simply because Elon Musk is the leader of Tesla. And Elon Musk being the leader means he's going to come up with an idea that no one has thought about yet, okay? 10 years from now, next thing you know, he has a brand new idea that these cars can float. And in some way, he's going to use that to be able to do something else. And we're going to be like, oh my God, he's a genius. Surprise, surprise, guys. Elon Musk is going to be innovating. And he's going to invent something that we're not thinking about. And if that's what's going to happen, then you best believe that there's going to be a premium assigned to the stock as well. It actually might be trading for even more than I suggested in this video. But that being said, guys, I hope you understand why I'm so bullish on the stock and why I bought more, why I believe this stock is going to be a more than $2 trillion company, because I think a 30 PE is very reasonable for a company like this, a company that's going to start making electric airplanes at that point, I'm assuming, maybe some electric rail, going to be morphing of the Boring Company, going to have HVAC systems, going to have solar and power storage, guys. All of that is going to be booming in the latter half of the 2020s. And so once that happens, I'm very, very excited for where the stock can go. I hope you enjoyed this video. If you did, please smash the thumbs up button down below. Hit the subscribe button with the notification bell, and make sure, guys, comment on this video because I love having conversations with you guys. Conversating with you guys is why I do this, why I do YouTube, because it's so much fun to interact and see what everybody's thinking. Maybe I can get a new stock. Maybe I can get some new ideas from you guys. So with that being said, have a great day. This has been BK, signing off. Bye-bye.